at HBL. So I'll hand over to Arif to take things forward.
Thank you so much, Farhan Rizvi from AHL, for hosting this call. I'd like to welcome all the participants on this call for the 9M25 results. Firstly, I'd like to introduce the panel. We have Mr. Mohammad Nasir Salim, the President and CEO of HBL. We have Mr. Amir Irshad, Head Corporate Commercial Investment Banking. We have Mr. Irfan Ahmed Mir, our CFO. Mr. Risham Mohyuddin, the Global Treasurer of the bank. Mr. Tariq Masood, the CRO of HBL. So without much ado, I'd like to request our President CEO to start the meeting with the opening remarks.
Thank you, and welcome everyone. I think it's a great privilege and honor to be speaking to you today. We have continued the momentum that we put together. As many of you would recall, 2024 was a good year, one of the best years for HBL. And we continued that trend this year into Q1, Q2, and now the Q3 results. So from a strategy perspective, it remains pretty much the same. Our objectives are threefold. It's very simple. Creating a positive impact to Pakistan's economy, because we firmly believe that the stability and growth of this economy allows all players within this ecosystem to prosper. Second is providing thought leadership and shaping the financial sector. And in this case, it's really about the focus that we bring into the agri sector, the SME sector, the value addition through HBL Asset Management. We're also now looking at innovative products around agri and looking at funds potentially which are investing into agri and livestock. So I think with the microfinance bank, there's a huge penetration. Financial inclusion for Pakistan is a big priority, as is sustainability. And these are the elements that we will continue to focus on. In addition to, our, as we call them, the hero products or winner products, which drive the core business momentum. I'm not going to cover financials because Irfan is here with me, who's going to take us through a presentation to cover it in more detail. And then the question and answer session we will cover. And we have the key partners here from the management team here to answer any questions which may require, a more in-depth answer as well. So Irfan, I'll hand it over to you to walk us through the presentation, and Farhan to help with navigating it on the screen for everyone.
Sure. Farhan, can you go directly to slide 4? Yeah. HBL maintains leadership position in core segments, all core segments. In a lot of them, we are number one in the industry. In others, we are dominating as well, while maybe position-wise, number 2 or number 3. We are largest in the number of customers. Our next competitor is essentially 1/4 of us, basically, with 40 million plus customers that we have across all segments, branches, connect, and corporate customers as well. We are largest in the term of deposits. The deposits have reached 5.1 trillion with a growth of 713 billion in just 1 year. And in addition, we are also number 1 in advances with a leading lending institution in Pakistan with over 2 trillion of basically net advances. And in terms of our international network, we have 25 branches, which is largest also in terms of the number of branches of a Pakistani bank abroad. In addition to that, we have our branches are 1,640. From profitability index, while we are on a PBT basis, we are not number 1, but we are one of the largest in that, and a few of them, sorry. In NFI terms, we have the largest NFI, and growth-wise, one of the highest growth entities, which have grown their profitability in a sustainable and on a year-on-year basis. Our investment portfolio have reached 4 trillion, backed by core business investments and also through our leverage strategy. And I will talk in a bit more detail later on in the presentation. Go to the next slide, please. Our achievements are seconded by not only internally, but also through external validation. We have gotten awards as the best bank from Eurobank and best corporate banks for large corporates, best investment bank, as well as best bank for SME from Pakistan Bank Awards. And we have ranked number 1 in banking on equality, which actually shows the breadth of our recognition and the area that we operate in. Next slide, please. Our deposits have reached over 5 trillion, which is the highest in the industry. And they were 4.4 trillion in December 24. The growth is remarkable over just 1 year. And a large portion of that growth, over 300 billion, has been contributed by current accounts, which is investment portfolio has grown to 4 trillion from 2.5 trillion on the back of a leverage strategy that we adopted this year to support our NII. Advances growth, especially in corporate sector, have remained a bit soft because of the lack of private sector credit demand. However, the bank continues to grow in the core priority sectors like SME, agri, and consumer. SME at the group level, we have reached 141 billion portfolio. This includes exposure taken by HBL and the microfinance bank that we operate. And in agri financing, we have crossed 100 billion mark comfortably to remain at 108 billion. If you look at consumer, just this year, the portfolio has grown by 15% and we have reached 164 billion. This growth is led by personal loan and credit cards, both of which products we are market leading. And in other products, auto loans and mortgages, we have significant portion and a high level of growth as well. From touch points point of view and outreach, we have the highest total touch points in the industry among any bank. These range from what we call branches, completely physical, to phygital, which is sort of like connect agents. We are digital as well, and some physical presence in form of a agent, and also POS terminals and QR codes. So we have 141,000 touch points in the country to serve our customers in any manner they want. Next slide, please. The group profitability, profit before tax, have gone up 31% on the back of core revenue growth in core domestic. The core domestic in profitability has gone up by 28%. Domestic subsidiaries have turned around because HBL Microfinance Bank, which was in a loss last year, has turned around to profitability, and other subsidiaries continue their profitable trajectory throughout the year. Core International, while has gone down because of the interest rate cuts that they are facing, and obviously there is spread compression there, which has largely to an extent been countered by flattish expenses and controlling their inefficiencies. Although the last 2024 number included $3.8 million of one-off, excluding that, the reduction in the PBT has been limited to 6%. If you look at core domestic in detail, the revenue has gone up by 21 billion by 10%. And if you look at NI has gone up 11% despite a massive rate cut that has happened throughout this period. This is on the back of 23% growth in average current accounts, which has supported NI. And we have also been building our floating portfolio using leverage strategy that has helped us counter the spread compression impact on advances and other securities. Cost of deposit has rationalized because the current account mix have improved during this period. And also the rationalization on the saving account rates has also happened to match them, align them more with the market. This is all topped up by a just 7.5% growth in the expenses, which has been curtailed to that extent through various initiatives that bank carried out, started in 24, and these are continuing. And that, I think this growth rate is the lowest in the industry as we see the results coming through. Next slide. Deposit momentum continues, in fact, gains strength during 2025. We have been focusing on growth in deposits, which have not only in total deposits, but in current account. The total deposit have gone up by 16%, while current account have grown at a higher percentage by 300 billion, as I stated earlier, which has resulted in domestic cost to CAR ratio to increase from 37% in last year to 40% in September, which is a significant contribution to profitability and to counter spread compression. Next slide, please. As I stated earlier, the lending portfolio, we are the lead lenders in the industry. While corporate demands remain soft, however, we keep growing our SME, agriculture, and consumer book. The portfolio is very well diversified while corporate still constitutes a large portion of 33%, 23% portfolio relates to international, and it's well spread out against agriculture, SME, and consumer, which is a very well-balanced portfolio and is very good, in a good position to counter future spread compression, considering the high investments in high spread lending segments. NPLs have declined over the period on the back of strong recoveries that we made this year. Infection ratio hovers against 5%. International portfolio remains largely concentrated in UAE, UK, and Bahrain, and these are mostly FI loans, which are relatively short term, and the portfolio health is we are quite comfortable with it. Next slide, please. Investment has shown significant growth on back of primarily the increase has come from floaters, which positions us well in terms of any potential rate increase that may come. The portfolio average age is around 1 year. Again, places well bank in a position where the rates are essentially bottomed out. And the floaters percentage in the total portfolio has reached 58%. Next slide, please. Next slide. Yeah. Our focus remains on shifting transactions and customer to digital platforms, so that one, it is easier for the customers to do transactions and it's faster. And also it is more cost efficient for the bank to serve those customers. So overall, our digital transactions through digital channels have reached 27 trillion and 34% up year on year, which is a significant jump. Mostly they are coming from mobile banking and cash management. In mobile banking, our throughput has reached 8 trillion, which is up 47% in just 1 year, which is a significant increase over just 1 year period. That shows the quick adoption of mobile channels by our customers. We are market leaders in credit cards, with 6.7 million card base, including debits and credit cards. In debit card, the spend has gone up by 21%, and we have 14% market share of the whole spend market. In credit card, the volume has gone up by 27% year on year, with 40% of the industry spend through HBL card. In POS, leads the volume growth by 42%, with a 28% market share, and it hovers around between 32 to 28% depending on how the market moves. In transaction banking, we are the market leaders by far, and it continues to grow. And overall growth in transaction banking is 35%. And most of the transactions, 78% of the transactions that we do through this channel are digital. And the percentage is increasing every year by 3 to 4%. Among banking sector, we are the leaders in branchless banking through our Connect proposition, and the fact that this year the core connect business has grown at a faster rate, in fact, has more than enough offset the decline in G2P transaction due to the mandate rationalization by the government. And overall, we have shown significant growth in connect volumes despite decline in the volume throughput by G2P. Overall, our 92% of our customer-initiated financial transactions are now going through the digital channel versus 8% on over the counter, and that ratio is consistently going up year on year by 2% a year on average, which is a significant achievement considering the volumes involved. Next slide, please. The CAR ratio has significantly strengthened to 18.3%, and it is at higher on the back of profit retention and higher profits as well. The quarterly profit have increased despite the spread compression and despite a much higher tax rate applicable to HBL this year versus last year. Cost discipline is now bearing fruit in terms of reduction in overall group cost to income ratio to 55% from 56.3% in last year, and domestic cost to income ratio is already below 50% since 2024. ROE has reached back at 18.5% from which is, I think, one of the highest levels that HBL has ever shown, and I think it's more normalized, and we consider 18.5% to be a good ROE for a bank our size considering the environment. Next slide, please. The performance, we are glad to see that the performance is also reflecting in the share value, and the share price has been going up quite significantly this year. The price to book basically is also, the book value per share is also gone up to 316 rupees per share, with equities consistently rising. Dividend payout, we have declared 5 rupees dividend this quarter. We have, as committed in past many calls, that we will grow our quarterly dividend in a consistent and sustainable manner, and you could see the banks doing as committed. EPS has remained at 35 rupees per share with price to income ratio at price to book ratio of 6.4, price to earning ratio of 6.4. I think that is it on the numbers, and I'll give the call back to Farhan for any question, answer, or comments and feedback from this one.
Sure. Thank you, Irfan. We'll now open the call for Q&A. Just for the participants, you can ask your questions using the raise hand button on the screen, or you can also type your questions in the chat box. Just one thing, in terms of housekeeping rules, we won't entertain any anonymous questions, so kindly identify yourself and your company name when you ask a question. So we have a few questions in the chat box. I'll start from that. There's a question from, there are actually quite a few questions from Waleed Rathore at Maple Leaf Capital. First question he's asking is, what is the breakdown of savings deposits between MDR and non-MDR deposits? And what is the average cost of term deposits and their average maturity?
Well, most of the deposits in saving category are subject to MDR, except for corporate and government public sector deposits, that categories. That breakdown is essentially most of the retail deposits that we get are from individuals, so those are still remain subject to MDR. I don't have the exact proportion of those deposits as of now, but it's like, as I recall, it's around 30-40% deposit won't be subject to MDR, others will be. And the maturity of term deposit range from 3 months to basically as long as a year and 5 years. But I don't think we should be giving good average term deposit. I can get back to you later on for that.
And actually, the term deposit maturity profile is also in the December 24 accounts as well. So when you see the December 25 accounts, you'll get a full breakdown of all of that, but nothing that impacts the NIMs in any way. And most of these rollovers will obviously increase NIM going forward.
Thank you. A few more questions from Waleed. He's asking what is the rate currently being offered by the bank on term deposits. I don't know whether you want to comment on that and what sort of spreads you're earning. Can you also provide a breakdown between floating PIBs, fixed PIBs, and T-bills? And what is the average yield spread that's earned on those along with the weighted average yield?
So floaters on the banking book, now I'm leaving the trading book out because that's a high velocity portfolio and changes from day to day. But on the banking book, we have roughly 2/3, so about 65, 66% on floaters, 10% in T-bills, and close to a quarter in fixed rate PIBs. The spreads are obviously, the market spreads are for the 10 years now, they only assume 10 years, so around T plus 90. We are comfortably above that on an average. But as we are facing repricing pressures in this quarter, as every other bank is. So we're starting to see some repricing of that. Your specific question was on the yield or the spread?
The spread.
The spread is comfortably north of that the market, so it's over 100 right now. That's on the
And
floaters.
the weighted average maturity, I think there was a mentioning about one.
It was 1.05 year.
Yeah, so I think that was also in the presentation. Yeah. Okay. Okay. While we wait for further questions, we have the next questions. So this is a question from Fiza Ejaz. She's asking, what's the proportion of the fixed portfolio and what is the duration and yield on it? I think, Irfan, you had partly touched on that during the presentation when you were breaking down the fixed PIB.
The portfolio was 58% of the whole book, and an average age was 1 year basically.
Yeah. Okay. Got it. Yeah. Okay, we have a couple of questions now live. Let me just allow. So there's a question from Syed Fawad Basir. Fawad, you can now ask your question.
Ji, Assalamu alaikum everyone. This is Syed Fawad Basir from Q3CY25 Securities. My line of questioning for the bank has always, in the recent past, has been focused on the IT expense, and it's a treat to see the expense stable at about 6 billion for each of the 3 quarters that have passed. And the recent on social media, I've seen some celebration going on for 3 or 4 branches may be converted to Temenos. So obviously one of the largest branch networks in Pakistan, or possibly the largest branch network in Pakistan. We're just in 3 branches. Do we see this run rate continuing going forward, or can we expect slight escalation as the number of branches increases going forward?
So Fawad, great question. I think we're extremely excited that finally we've got past the coding phase, and actually into the conversion phase. So these 3 are really the pilot branches. The objective is really to completely change the core banking for first the domestic bank and also in the international locations. And that unlocks for us a lot more opportunity. Clearly, we are the digital leaders, but I think this upgraded core is going to give us the ability to deploy new developments that will come up much faster than we were able to do in our prior applications. So we will continue to have a 2-pronged strategy. Cost, from my perspective, there is good cost and there is bad cost. So as far as bad cost is, whether it's in the name of technology, whether it's in the name of any other item, if you're going to throw money and spend it inefficiently, the output is not going to be there. Good costs are costs where there is a direct correlation in terms of the capabilities, the reach, the stability, the scale that application or that tool that you're investing into can give you. So from my perspective, we will continue to see a lot of the bad costs in technology and in other areas continue to go down. We've also introduced the concept of value engineering in terms of how we build new branches, new buildings, so on and so forth. So you'll continue to see that trend, with a focus on the revenue creation, so that from a ratio perspective, we continue to move in the right direction. The second point, to your point, will be when this project is by and large completely done as per finance terms, then right now the project costs are being accumulated. They will be partially offset by costs that we would save by sunsetting applications and the legacy stack components. But clearly, when we set up the prior system, that was at a certain rupee dollar parity rate. Today, the rupee dollar parity rate is different. So we will, to your point, see a slight bump there. Our hope and expectation is that one of the constant that I guess the analyst community would have seen over the years at HPL is that the revenue momentum, continues to be strong and remain strong. So I'm hopeful with the momentum that we are taking forward on the revenue line, the profitability line, we will continue to see at a ratio level things improving in the right direction. But to your point, had the same parity rate been there, then it might be a different story where you would have seen more rapid improvement. But the focus for us will continue to be on the top line, to be able to support the right investments that we do.
And the velocity of the three branches, I think that was the other question.
But the velocity is by end of this year, what we're looking at is the 3 becoming 10. That really allows us to iron out any learnings that we have. And then you'll start to see a much more rapid deployment. The bulk of everything will be, inshallah, completed in 26 in terms of the domestic bank rollout.
All right, thank you for that. And just the second question I have is pertaining to loans, right? So obviously, quarter on quarter, loan book throughout the year has pretty much been stagnant. And we saw a provision charge in third quarter, which sort of stemmed the profitability a bit because the rest of the matrix were quite impressive. So just any color on that, any particular sector that we need to look out for?
Look, just before I give it to Tariq, there was a significant recovery in quarter two that had caused a provision reversal, that therefore the quarter two provision were better than expected because there was a recovery, and then quarter three normalized. So the quarter three charge provision wise is at par with rest of quarter, related to stage movements also in IFRS 9, and now I'll let Tariq address.
So no. Sectoral stresses, I think the only element that we are watching very closely is the impact of floods. So far, we have quantified a very marginal impact of the flood-related losses on the LV portfolio. Those are expected to be much less compared to what we saw 3 years back. Even in those cases where we initially had taken some provisions, the recovery rates were far north of 90%, and that's the expectation in this case as well. As far as the other sectors that we have covered in the past, both steel and auto, some recovery on the auto side, but steel continues to remain under stress. We aren't expecting a major change in trajectory there. But generally, the offtake itself on the private sector side of lending side That's been sought, as Irfan has already covered.
All right. Thank you. Thank you for that.
Thank you, Fawad.
Best of luck for the year.
Yeah.
Thank you. Thank you,
Uh,
Fawad.
Our next question comes from Nihal Qasim. Nihal, you can speak now.
Assalamu alaikum, everybody. I wanted to compliment management on a fantastic quarter. I think the clarity just given on good and bad cost is really encouraging from a investor perspective. The sustainability of increasing dividend is very comforting, and I'd like to say overall what I've heard in this call and what I've seen in the results is really encouraging from an investor perspective, and keeps us looking forward to the next call. And I wanted to wish you and the management team all the success. Thank you.
Thank you, Nehal. And I think feedback from the investor community, the analyst community, I think is a valuable gift. And I personally benefited from some of that feedback, which helped solidify the strategies that we have. And frankly, I think when you look at, and maybe this is a digression, I want to bore the rest of the analysts, but what is Pakistan's economy striving for? It's striving for having vibrant, healthy, growing institutions and organizations. I mean, we look at sick industries, sick sectors. It's about improving it. So I think the banking sector has been in a good place. The trajectories now are looking good, but I think it becomes even more important for us to remain thoughtful and watchful, as we move into the environment where we continue to maintain these standards. So thank you so much, Nehal, for that vote of confidence. We will continue to focus on these priorities as we've just mentioned, to continue to maintain that confidence and trust.
Thank you, Nihal. Okay, we have a few questions in the chat box. This is a follow-up question from Fiza Ejaz. She's asking about deposit growth expectation for 26, and how do you see the current account mix evolving following a strong current account performance in the 9 months?
The growth in this year has been 16%. On a very high base, we do expect to continue a growth level of around mid-teens, basically around 14 to 16%. And the fact that you see current account ratio has gone up by 40%, I think we continue to focus on that. And then with our continued focus, we would prefer to keep it north of 40%, and that's what the target is and expectations are.
So I'll add my 2 cents into this one, and I'm not as much a numbers guy, I'll be honest, as our honorable CFO is. But from my perspective, it's easy for us to maintain, or to say we'll maintain this number or ratio. I think the challenge always is we're talking about customers. So the dialogue that we have in the product space is around the customer value propositions. So certainly, as Irfan said, current account is going to be a major cornerstone, of the profitability element there. The total deposit is going to be something that we need to maintain, because when you deploy balance sheet, all the other ancillary things come with that. So it is going to be a two-pronged strategy. The current account strategy is predominantly going to be driven by the customer value propositions, and specifically for current account, you'll see a lot of focus being given in terms of making sure that the customers feel they are getting the right value out of the current account. Otherwise, the current account is hard sale. There's no stickiness in terms of being able to maintain and grow that number, and it's counterproductive. So there will be a method to the madness, as they say. It's not just going to be chasing that percentage, but it is going to be the value proposition that supports it.
Thank you. We have few more questions. So there's a couple of questions from Osama Habib from AKD Securities. He's asking Risha about your expectation of interest rates cuts in the future. Mix of fixed and floating, that's already been answered. There's one specific question. I don't know whether you want to comment on it, but I'll still share with you. He's asking what is the current effective 5-year spread on floaters?
Risha, should I get that crystal ball from your?
I have my. So interesting you mentioned cut, because it seems that hikes are completely off the table for the foreseeable future. Look, I think the central bank is very comfortable with maintaining stability in the policy rate. Inflation is ticking up, so they want to keep a healthy gap between inflation and CPI, so interest rates and CPI. So, and on top of that, they managed to maintain a high degree of stability in the exchange rate. So they don't want to roil the market. So we see, quite frankly, stable rates for in the short to medium term. I would say beyond that, it's a flip of a coin whether rates go up or down, because as the cycle turns, inflation could start ticking up, and therefore, you could see potentially a hike in a year and a half, 2 years. So I would not bet the farm on saying that the next move will be a cut. So we're acting accordingly, but for now we're seeing a high degree of stability in the short term.
Okay, thank you.
What was that?
Sorry, you want to carry on? No, I think the other bit was on the floaters. He was asking what's the current effective 5-year spread?
Well, the market is there's more demand in 5-year floaters coming through. That's around 55 to 60 basis points in the market. But that's also driven by lack of supply, because the ministry has stopped issuing 5-year floaters. So we have a back book of floaters in 3, 5, 10 across the curve. So we're managing accordingly. But it's unfortunate they've stopped short-term floaters, because there is demand for that in the market.
Thank you. Nasa, this question is for you. That's from Hamza from H Capital. He's asking broadly a strategy point of view from a growth strategy perspective. I think you've highlighted a little bit. Initially, he's saying some banks are aggressively trying to gain market share. What will be what's HBL's strategy on that front?
I think, Hamza, it's again, I'll have to pull. Rishabh already had his crystal ball. I'll have to go get my crystal ball as well. But from a strategy perspective, I think we'll always balance profitability and growth. So certainly, we want to maintain the balance sheet at a dominant size or a significant size, and that'll be a combination of the current account strategy as well as saving accounts and term account strategies. The competition, I think it's while it's important to understand what the competition is doing, and what our response would be to it, I'm not sure we need to react to everything that somebody else is doing. We have a certain strategy. If you want to get into a competition or a price war over something, I mean, at the end of the day, is that where a sustainable base is being created, or should it be about the customer? Should it be about the customer value proposition? Should it be about bundling of, when you look at HBL, we're a full stack bank. So there's also HBL Asset Management, there is HBL Microfinance Bank, there is HBL Zarai Services, which is a unique model that gives us the kind of ability to do things that no other bank can. I mean, they can create a brand of food products and be able to sell it. They can buy industries which are agri-related and be able to run it. So again, the kind of power of the propositions that can be put together is where the focus of this bank is. And one of the things we've done internally is, we've eliminated the silos between the various product teams that sat in the bank. So we basically consolidated all product teams together, because today product development has to be customer driven and it has to be digitally enabled. And these are rails that if you keep things siloed, you're going to run it the old fashioned way that it used to run in the 60s, maybe a little bit more advanced. And sales needs to focus on sales and selling that proposition. I mean, very simply, this is Hamza, where we look at and think differently. So certainly, we're well aware of what is happening in the market, but we will always have a balanced response to it, and certainly never a reaction to it that only looks at one lever and doesn't look at the other.
Thank you. We have a few questions from Jeffrey Bat from Euphorics New Frontiers. First question he's asking is name on your credit card portfolio, and the second question is about Diamond Bank Kenya, performance on that and potential. I mean, it seems to be a pretty open-end question. Opportunity, or is this subject to future divestment? So the first two questions that he's asking are on NIMs on the credit card portfolio and investment performance of your investment in Diamond Bank Kenya.
I think we're not going to dig into Diamond Trust Bank strategy here. That, much as I'm sure the question is directed to that. I think as far as the investment is concerned, it is something that we're comfortable with.
It's profitable,
it's profitable and it's comfortable. It contributes. But Irfan, if you can run through the cards question in terms of the spreads.
Yeah, spread that you make on the card portfolio. Yeah. That's what he's asking.
Cards, right?
Yeah.
Around 30% is the rate of the card, right? And the spread of the card, basically we charge. That's what it is.
Okay. He has a couple more questions regarding technology investments. Is your focus on tech investments providing greater insights into your borrowers' creditworthiness? Do you see tech having a positive impact on credit quality? And then he's saying that we fully support your tech investments. Hope you continue building your tech stack.
So thank you for that vote of confidence on the tech stack piece. But certainly the use cases that we're looking at, and it's all across. It's really, again, full stack. So we now have instant credit approvals online on the mobile app for our personal finance, and I think about 45% of total acquisition is now being done instantaneously. You apply for a personal installment, and within literally minutes, the funds are credited to your account. So that's the kind of thing. Is we've taken the credit analyst, we've looked at our scoring models, we've looked at that and been able to take that logic and put it there for about 45-50% of our customers to go through. The ones that don't go through are the ones that we're, secondary documents, supporting documents. There's some RAC exceptions, or risk acceptance conditions that we need maybe an additional document, so we do a second review there. But first pass, we're seeing that. So there's tech stack that is going on that side. The tech stack focus in terms of a CRM and building, the moments of truth, for a customer, which incentivizes them around, the acquisition of an asset product. Those are things that we do have as part of the roadmap, where, if you're walking through a mall, you have the mobile app, there's a discount going on something, and we notice from your card statement you like that establishment, whatever that is, whether it's food, clothing, whatever. that should flash on your mobile app. And when you pay for it, you should be able to finance it if that's what your desire is. So we're really looking at tech as being, the common sort of backbone around everything we do. So Tariq is doing modeling, and he is pulling in large amounts of data, to develop the risk scoring models, right? And we're just refurbishing that with the product team. I think there's like 200 models or so that are being updated. So I think this is the frontier, and I firmly believe that this enablement is something that we need to continue to embed, and including straight through processing, paperless, and that allows us to get a little mature in what is the third industrial revolution. I think the question that has not been asked is, there's a fourth industrial revolution coming, which is now going to be driven by AIs, with LLMs, with blockchain, with cryptocurrencies, with virtualization. So while the question was not asked, but that is also something that is not off the radar, but that's something that let's mature the things that have been matured already. Unless there's a leapfrog opportunity, then obviously you leapfrog over the legacy applications. So we will continue to measure those and monitor those as we continue to go along, and new capabilities keep on coming in.
Thank you. So we have two more questions. I think one for you, Irfan, and one for Risha. What is the bank yield on in advancing investment? I think it's been highlighted, but there was a request to sort of repeat that. So if you could sort of give a broad view. I mean, what's the yield on advances and investments?
Advances and investments.
Yeah. Obviously, advances will be a different yield, and I think investments will be different. Yeah.
Look, advances yield is essentially, it varies largely because corporate spreads are quite thin and the yields are low, but compared to consumer and agri, they are very high. So the average yield should be around, I think 13-14%. That's it.
13. It's around 13.
Yeah, it should be around 13%.
And on the fixed income investment book, as of September, it was around 12.25.
Okay. And Risha, this is the last question. This is for you. I mean, what's your view on the PKR USD exchange rate?
Another crystal ball one, Risha, keep that close.
I've run out of water, so I don't know if I can make that prediction. Look, steady as she goes for now. But I think at some stage, it'll be important for perhaps the rupee to adjust, because exports are starting to flatline. So there needs to be some further encouragement for exports. Having said that, the central bank is very clear they want a stable rupee. So perhaps a gradual inching up of the dollar, but no sharp movements either way. They certainly don't want the dollar to come down too much. But on the upside, I think over time that'll start drifting up. But for now, as I said, they're just sort of invested in maintaining that stability. So in the very short term, we don't see any real movement. Perhaps longer term, perhaps second, third quarter next year, then you might start seeing dollar to drift up.
Thank you. We have no further question. Asa, I will hand back to you for final comments.
I think I'd like to thank all the participants. The questions were very valid, spot on, and I think the feedback, our objective continues to be now to continue this engagement in a much more constructive manner, and take it forward, because the bank has many constituents, and investors are a very, very large segment. The analysts drive a lot of that feedback, and it's important for us, while we talk about the client and the customer value propositions, there has to be a shareholder or an investor value proposition there, and similarly regulatory compliance and all the stakeholders. So it's a 360 view, and I'd also like to thank Farhan, you, and Arif, Habib for helping us host these events, and inshallah we'll continue to do more in the future. So I thank everyone, and now all eyes focused on December. That is where the team is, and 2026 obviously, and the 3-year strat plan, because we always go by 3 years and we refresh those. So we'll continue to work on those things. So thank you, everyone.
Thank you, Raja Saab. We wish you all the best for the rest of the year. Very strong 9 months. So congratulations on that. Thank you, participants. We'll now end the call. Thanks all for dialing in. Thank you.
Thank you.